we will move on to our next topic now, which is historical performance. Michael, I'll begin with you. Bitcoin is appreciating at 200% a year, and you have said we cannot expect it to expand any faster. So one of Bitcoin's biggest strengths is clearly its price performance, but could it also not present its biggest risk? The higher Bitcoin gets, the more fear of missing out trait catches fire. If this risk-taking behavior continues, isn't it causing a risk in and of itself, since the price may be based purely on speculation? You have 5 minutes on this topic.
Well, I think Bitcoin's getting much less risky, and I'm going to start with a review of the history here. In the last 1 year, Bitcoin's up 693% versus 4.66% for gold. Its Sharpe ratio is 4.7 versus 0.43% for gold. Over 5 years, $1 invested in gold would yield $1.33. $1 invested in Bitcoin gives you $132 for a Bitcoin. If you actually chose gold instead of Bitcoin, you lost 99% of your wealth. It's devastating. Over a decade, Bitcoin's running about 190% on average every year versus 1.65% for gold. And again, the Sharpe ratio is 4x as much. Let's take a century. Well, people know that gold was $20 an ounce, and now it's $1,700 an ounce. And so you could say, well, it's like up almost like factor of 80 or 90. But when you actually risk adjust it, you realize there's nobody that actually got that return over the course of the century. 95% of the gold was confiscated in the last 100 years. So maybe theoretically, the United States government might have got that gain, but everybody in Russia, China, every country in Europe, everybody in South America and Asia, they all lost their gold. So if you do a risk-adjusted calculation, you find that you invest $1, it should be worth $100, but you lost it, not all of it, 95% of the time, you got $5. And so the real risk-adjusted return over a century is 1.5% per year. It's not any better than the last decade. It's devastating. Over a millennium, gold, 2,000 years ago, gold was like 80% of money. Gold was money. And then it slid from 80% to 40%, in the Middle Ages. By the time we got 1940, it's 40, and then 30, and then 20. And today, the monetary value of gold is maybe 5 trillion, half of the gold supply, and the total store of value in the economy is 250 trillion. So you divide 5 trillion into 250 trillion, and gold is 2% of all money. Over that time period, it came with thousands, if not millions, of massacres and seizures. People talk about Bitcoin being volatile, but in the year where Bitcoin went up 693% in 12 months, here are the maximum drawdowns if you look at the end of day closing price on Binance. 13%, 10%, 14%, 11%, 17%, 11%, 25%. That was the worst on 126. 21%, 16%, and 12%. So in fact, in order to get a max drawdown of 25%, to get a 693% advance is pretty historic performance. Bitcoin liquidities increased by a factor of 10 versus normal days over the past 6 months. We had 6.9 billion trade on Binance 2 days ago or a day ago. So you're talking about $10 billion a day in the spot market. Gold peaked August 10th, around the time that MicroStrategy announced that we bought 250 million worth of Bitcoin. And I came to this with a completely objective clean slate. I said, I got to buy gold or I got to buy Bitcoin. But my conclusion was, if Bitcoin works, gold probably won't. And if gold works, Bitcoin won't. So what's the difference? Well, if I'd chosen gold, I would be minus $4 billion today over 8 months versus Bitcoin. It's a $4 billion choice. One is right, one is wrong. As everybody says, gold has a long history of manipulation by governments, banks, and miners. Jim Rickards, The New Case of Gold, he says the paper market could easily be 100 times the size of the physical market. Quote, there's no doubt we're seeing price suppression through the paper market. Rigging futures is child's play. I respect his comment. Bitcoin's first decade was marked by legendary volatility. There's no doubt, but the assets matured. The network has spread. It's entering its second decade. It's like LeBron James at age 19. The best player is always the most volatile player. If you look forward, what you see is an extraordinary asset on an extraordinary network that solves the problem better than gold can solve the problem. That's why I think it's the right choice, and there's consequence to making the wrong one.
Michael, thank you for that. Some incredible statements being made here. Frank, you'll have a 1 minute rebuttal now.
All right. Well, I've real trouble with the way you calculate what is happening at any given time between Bitcoin and gold. And I've heard you say this before. You know, last year, gold showed that it didn't perform versus Bitcoin. Listen, if I chose 1 year periods in Bitcoin over the last 4 years, it would look a lot worse. So you cannot define what the value of gold is based on 6 months or a year of trading. You have to look at it over a much longer time period. That's number one. Number two, I have real trouble with how you calculate your 190% compounded annual growth on Bitcoin. I'll get into that later. But again, I think it's always a function of garbage in and garbage out and how you calculate your returns. Maybe gold isn't used as money today, but it's certainly used as a store of value, and it's never failed on that. And again, I will get into that in a moment. In your claim that, listen, you made all these billions on Bitcoin versus gold over a 1 year period, you have to understand what dynamics drove the Bitcoin price up and why gold did not go up. And I think that's, again, I will get into that in a moment, but that in itself does not tell you or demonstrate that Bitcoin is a store of value.
Thank you, Frank. And you will have time to expand here because it's your turn now for your question. In August of 2020, we've said it, gold made new highs of $2,075 per ounce. Gold was up 36% for the year. The M2 money supply continued its unstoppable ride up, and the dollar kept falling. With the stimulus measures, the trillions of dollars of debt, and the Fed doing more easing, gold didn't continue on the path of higher highs. Instead, here we are and having corrected circa 12% year to date. So the most common reason I hear is that Bitcoin has now replaced it as the asset of choice. Economists have even said that gold without competition from Bitcoin, would increase in value by 13% each year for the next decade. So the question is this: did gold's 3,000-year reign as the ultimate currency officially end in August of 2020, Frank?
Well, the short answer is no, absolutely not. And listen, you have to understand what gold is. And again, there are a lot of misconceptions about what the utility of gold is for investors. And first we need to clarify one big misconception. It's not the gold price that you need to be looking at. You need to be looking at how it's measured against certain currencies at certain points in history. And let me give you an example, because it makes a huge difference into the reason why you need to own gold. So let's take the Argentine peso, which Michael loves to use as a means of demonstrating what happens to currencies when they get into trouble, when they're mismanaged, much like what the US dollar is experiencing today. The Argentine peso, gold in Argentine peso terms has gone up 28-fold in the last 10 years. Take a more recent example, the Turkish lira, which is experiencing its own currency crisis at the moment. It's gone up 4-fold in the period. Gold, measured in lira terms, has gone up 4-fold in a period of 4 years. That's how you measure the true value of gold. Also, you need to understand what happens during periods of high inflation. That's when gold performs really well. The last time we experienced that here in North America was in the 1970s, and when gold went from $35 to $850, that's 25-fold, because we had high inflation. Now, we haven't seen in this current cycle high CPI inflation yet. All of the inflation has gone into assets, and that's why we have all of these asset bubbles happening, which one could claim Bitcoin as an asset bubble. And so you really have to understand that part of it, because that's when it's going to become evident. Now, just a little fun fact, traditionally, and when we talk about what happened with gold last year, when gold has a big down dip, central banks and jewelers come in and buy on the down dip, and they buy big. And we saw this recently with both the jewelry buyers out of India buying record amounts this last month, and with the central banks declaring that on the down dip, they continue to buy at a furious pace. Now, contrast that with Bitcoin. And so when you talk about performance with respect to Bitcoin, it's not an appropriate term. Bitcoin has not been around long enough to be able to determine its utility as a store of value. And I don't buy the argument that a mere 10 years of history is going to be enough to indicate what the future performance is going to be. It's just silly. It's never been properly tested. So is Bitcoin impacting the price of gold? I think partially yes. I have a good friend of mine who's an economist who recently did a regression analysis on attributing what factors affected gold and why gold turned down. And it was about 40% was attributed to higher bond yields. 36% was to a higher US dollar, which was temporary. And 24% was attributed to Bitcoin. So Bitcoin is having an impact, and I can't deny it. But I actually think this is more of a North American perspective than it is a global perspective in terms of this rush into Bitcoin. It's worth noting that the US dollar is still benefiting from its premier reserve currency status. But as the world starts to fragment, the global monetary system starts to fragment, and you have countries like China, Russia, and Iran all looking to decouple from the US dollar for a whole number of reasons. As that fragmentation takes place and less trading is done with US dollars, the dollar will come under pressure, and especially with this money growth that we're talking about. Now, most Americans will only see that when it happens to the US dollar. They will only see the value of gold when it's measured against US dollars. Americans have a very funny way of seeing everything in US dollar terms. On the volatility side, I mean, people have very short memories. Sure, Bitcoin's done very well the last couple of years, but if you take points throughout the last 10 years, it's had stomach-churning roller coaster ride, and there's no reason why that won't continue. And so I can't see why anybody would invest in Bitcoin if the objective was to preserve value. Now, on a personal note, Michael, I think you're fighting the wrong fight. Gold is the least of your worries. You need to keep your eye on central banks and governments, because they're going to be the ones that you need to look out for. And I know that Jerome Powell has been dismissing Bitcoin as he dismisses gold as both speculation vehicles. And he's doing the same thing that every other one of his predecessors did, disparages gold, now it's Bitcoin. While they're in office, Alan Greenspan was a gold bug before, then a gold bug after, but during his time as chairman of the Fed, he was disparaging gold. And they do that because it is a threat, and especially if it becomes too popular. So I think investors really need to ask themselves, if they're looking to store value, which one's better, gold or Bitcoin?
Thank you,
I'm
Frank.
choosing gold unless you have some way to change my mind. I still choose gold.
Thank you, Frank, for that. Michael, 1 minute response, please.
You can't achieve the gold performance as an individual due to the seizure risk. Gold bugs for a decade have been viewing CPI and waiting for CPI inflation, and they haven't got it. The inflation came over the last 10 years, and it came to the assets, not to the consumer goods, because of technology and other dynamics. All the money's flowing into stocks, bonds, and other assets. It's not flowing into gold. So gold doesn't turn out to be a monetary inflation hedge. Gold is better in a collapsing currency, but locals can't easily get it, and they can't easily use it like Bitcoin. Bitcoin's the egalitarian solution with more utility. You can put it on a $50 Android phone, and you can buy it with plus or minus 1% markup. Finally, among central bankers, there's a growing consensus that Bitcoin's a digital asset, not a digital currency. That's been articulated by the Chinese central bank, by the US, by Jerome Powell at the Federal Reserve, by Christina Lagarde at the EU Central Bank. And it has the merit of being true. It is a digital asset. You don't buy it to use it as a medium of exchange. You buy it to hold for long periods of time.
Thank you, Michael. We're going to move on to our next topic.